Digital identity is the intended key to enable participation within the digital cage that is being constructed globally. There are the leaders, a vanguard of countries that have pioneered the rollout, countries such as Estonia, India and Denmark. For instance, Estonia's eID ecosystem now authenticates 99% of citizens online. India's Aadhaar covers over 1.3 billion people, which enables mass digital payments as well as welfare targeting. Denmark's MitID integrates across public and private services. Then there are the laggards, numerous countries that are lagging the global rollout, and it's these countries we will consider in this video. But of course, it's important to understand that the intended digital gulag is global. The desire is to replicate and, where necessary, adapt the systems evident in the leading countries and ensure eventually that all are compliant. In the developing world, this is spearheaded by the World Bank's Identification for Development ID4D initiative. ID4D seeks to ensure that every person has a legal and digital identity by 2030 in alignment with the United Nations Sustainable Development Goal 16.9. It's worth just noting here that no developing country that has ever been under tuition of the World Bank or the IMF has reached developed nation status. Now that's hardly surprising when you consider that the World Bank has been lending to less developed nations to ensure that they accelerate their digital ID rollouts. Of course, this is not infrastructure that will truly facilitate economic growth nor prosperity. Examples include a 2020 disbursement of IDA credit to Nigeria of $115 million, which was part of a larger financing package believed to be around $430 million. And Ethiopia's receipt of a $350 million IDA financing package to help roll out its FADA ID. Hardly high priorities for the citizens of either country, but the digital rollout shows that the world is clearly splitting into three lanes. The leaders, medium-speed adopters who are struggling to scale, and bottom-tier countries who have obvious foundational barriers. So let's start by considering medium-speed laggards, where systems are evident but scale is certainly lagging. Medium-speed adopters, typically middle-income states that already possess national identity systems and have introduced digital credentials, but whose usage remains limited. Their challenges are more about governance and integration. The World Bank's ID4D global dataset shows that while many such countries have built digital registries, far fewer have achieved cross-sector interoperability or high rates of remote authentication. Generally, they face key structural barriers, and these include fragmented institutional governance, represented by separate ID databases for health, finance, and different government departments. Limited private sector integration as well. An apparent lack of liability protection or incentives often means that the use of state IDs for KYC checks can be patchy. Then there's unequal digital literacy and access, whether it's rural or low income or elderly groups who face usability barriers, even where mobile coverage is good. Finally, the legal frameworks on data security are immature at best. The countries here that are furthest behind include Morocco, which has made institutional reforms and it's introduced the National Population Register and Social Register, but continues to struggle with system interoperability and rural inclusion. Then there's Indonesia, and despite its IKD app, it has seen modest adoption relative to its 270 million population. Number of services accepting the ID also remains limited. Colombia and the Philippines illustrate similar bottlenecks. Ambitious digital ID schemes have not yet translated into widespread authentication use across different sectors. Some medium-speed adopters are now breaking through, however. Brazil's gov.br platform has rapidly expanded from an electronic portal to a national digital ID credential accepted by banks and utilities. Thailand's digital ID bill and the National Digital ID Company are creating a unified authentication platform across government and finance. Brazil and Thailand are perhaps the globalists' model cases, examples of how strong regulation, interoperability mandates, and public-private partnerships can supposedly turn fragmented ID schemes into national infrastructures. In reality, the script is centralization framed as efficiency, standardization as inevitability, and corporate integration as public progress, with little reflection on who ultimately controls the data, the systems, or the citizens that are enrolled. Now, the bottom tier countries where the barrier is not digital integration, but basic state capacity. These states are often low income or conflict affected and lack universal civil registration, digital infrastructure, and the administrative institutions really that are necessary to operate a secure ID system. Implementation often outpaces governance capabilities in many countries, creating failed systems in the likes of Kenya. ID4D estimates that around 850 million people globally still have no official ID at all, and that most, of course, will live in sub-Saharan Africa as well as parts of South Asia. The structural obstacles here are quite profound, and those could be incomplete or missing civil registries. And without reliable records of births, deaths, or citizenship, any digital system lacks any foundation, really. There's weak infrastructure, which includes limited electricity, poor broadband coverage, and low smartphone penetration, making digital ID impractical, at least for now. And there's institutional fragility. Ministries of Interior or population may be under-resourced, lacking trained staff or cybersecurity capabilities. And then there's social exclusion. People who've been forced to move or who already live on the margins of society. For them, signing up to digital ID system isn't just a paperwork problem. It's about whether they can even trust the state that's asking for their data. Unsurprisingly, those furthest behind the rollout are in sub-Saharan Africa. It consists of Mozambique, Ethiopia, despite the aforementioned financial assistance, the DRC, Somalia, and even Nigeria. While in Latin America, the lower tier nations there would likely include Honduras, Paraguay, Bolivia. Now, there are several bottom tier countries that are gaining momentum. Bangladesh, long behind on ID digitization, now uses its national ID smart card as a cornerstone of mobile financial services. Kenya's new Maisha Namba program is actually starting to roll out quite quickly after the previous failure of the Huduma Namba system. So is there a sweet spot perhaps where there's both high cash usage and low digital ID penetration? Where would that lead us? Well, certain parts of India where digital ID penetration is low, Nigeria, Afghanistan. But if you want something a little more appealing, you're looking at Morocco, Indonesia, the Philippines, perhaps Egypt. Within Europe, Romania has the highest cash usage in the EU at around 80%, together with slow digital ID rollout, followed closely by Bulgaria. But the hard reality remains that wherever in the world we are, we must try to actually preserve cash and make a conscious choice to support local exchange while strictly limiting our data footprint. A digital future that is actually built with integrity would respect consent, be truly permissionless, and ensure a right to privacy. In that sense, the most profound act of resistance is not rejection, but creation. The building of ethical alternatives that reinforce the power of humanity and actually reject the machinery of global governance. Now, thanks so much for joining me. Do check out the other videos on the channel, and I look forward to seeing you next time. Bye bye.